All right, let's talk about Bitcoin. Where are we at? Cryptocurrency market analysis. Let's talk about it. A lot of things going on. A lot of people wondering what's going on. I find it fascinating in the Bitcoin, the cryptocurrency space. This market overall tends to appeal to a lot of people that are young and tech savvy. And I think that has to do with because younger people tend to be more engaged into technology, typically under 40, even under 30. I mean, it's amazing to me how many 20-some-year-olds are very familiar with this technology. The sad thing is most people don't fully understand it. And I think this is kind of the demise, if you will, or maybe the downside of the cryptocurrency market space in general. Um, but before we get into all that, let's take a look. So the current market cap's $364 billion dollars, $364 billion dollars. We are on a bit of an upbound today, rebound. We'll see if this is sustained. It doesn't matter to me either way whether it's sustained or not. But right now it's a good bounce. If it is, that's good. Going up's never bad. 10% today for Bitcoin, 11% for Ethereum. Come down here, 24% for Neo, 33% for NEM. So overall, there's some good solid gains in the market today. All the charts are showing a big pop up. I think this is primarily because of this SEC news, which quite honestly, this wasn't a lot of news that came out. It seemed like this was just a hearing. So it's basically just a big discussion. No real decisions, of course, were made in this, but here's basically what they said. And I didn't see this as positive or negative. And quite honestly, it was a little bit better than I had expected. What they basically said was that blockchain technology is legitimate, it is real, they acknowledge that. However, there is some regulation needed in the space. I think overall regulation is not good for this space, primarily because it's going to be difficult to regulate it without stifling the space. And I just want to say this, if you think there needs to be regulation in this space, then I think that what you're really saying is people are not capable of making their own decisions. They talk about that the riskiest area in the space is ICOs. I can go ahead and tell you because if you understand that ICOs are basically an unregulated version of IPOs, and what a lot of people in the crypto space, basically they're just naive. They would say things like, oh, they need to regulate these bad projects. But how do they determine what's a bad project? What criteria do they use? Well, already the same argument, all you have to do is look at the investment world, the stock market, the traditional stock market. IPOs, initial public offerings, when a new stock comes out, the government has already put in safeguards for the average person. And effectively what those safeguards do is make it impossible for the average 20-something, 30-something-year-old or the average man or woman at home wanting to invest in something new and exciting. They basically make it illegal. You have to be an accredited investor and typically it's more than that, but at the very least you have to be an accredited investor. That means that you have to have a certain level of net worth, which I believe it's up there. I think it's like a $500,000 that you have to have a net worth, or maybe it's $1 million net worth to be considered accredited investor. And you also have to have or an income of, I think it's like $150,000 or $200,000 a year just to be able to invest in an IPO. But then it goes even further because IPOs are not open to the general public. You oftentimes have to be banking with the right stock or be with the right stockbroker, and they have to have IPO shares available for you. The thing about ICOs, yes, it is a bit of a, now this is good and bad for a couple of reasons, and I can make an entire case on this. The good thing is, I will say that it does prevent people that have it does prevent some people with limited financial understanding to be able to invest in IPOs. The downfall is just because you have a high level of net worth or a high income doesn't mean that you're necessarily financially savvy in the area of stocks or IPOs, other companies. Heck, you could have arguably just inherited a lot of money, or you could have just gotten a really great job over the years, or who knows. It doesn't mean that you're an expert at evaluating new stock new stocks that come available. Now, Also, just to be just to take a company public through an IPO is a lot of work. It's a very, very expensive to take a company public. You have to elicit the big banks, the big banking, major, financial banks, Goldman Sachs, and those types of companies, the large stock brokers. You have to go there, your Charles Schwabs, and you have to work with those types of people to be able to take a company public in the first place. It costs a tremendous amount of money, and it's not easy. Therefore, there are a lot of companies that would. The reason people take companies public is to raise money. It's the same reason ICOs are created, initial coin offers. ICOs are created to raise money. In theory, the idea is to raise money to be able to create a development team to develop out the technology for a project. The biggest difference in ICOs and IPOs from when they get started, IPOs are typically well-established businesses that are going to the next step. ICOs are typically brand new projects that are very brand new. Sometimes they only have a white paper. Sometimes the technology is an idea, but it takes funding to take that technology to the next step. So if the regulations that they use for the stock market, they use for crypto, and there's no reason to think that they would not use very similar regulations for ICOs. I see that that's going to be a negative for the creation of new technology, and it's going to cut off the average man and woman that currently likes to invest in ICOs. So overall, I don't see this as a positive for the market, but I do believe that we are headed in that direction long term. The thing that they said that blockchain technology was basically the most was legitimate technology, basically, that needed the least amount of regulation. ICOs was going to need the most amount of regulation, and they said the cryptocurrency is somewhere in the middle. Governments have very strict laws about issuing currencies. So I suspect there's not one government on the planet that's going to clap their hands and be excited about the creation of any sort of a legitimate tool that can be used as any form of a currency. But we'll see where that goes. Overall, the news could have been far worse. This wasn't horrible news. And I think the market saw this as very good news. That's why it's kind of did a bit of a rebound here. Let's see where we're at right now. We'll do a refresh here. So it's continuing. Actually, I guess it pulled back a little bit. We'll continue to see what happens here. This is important to recognize. I always believe in being a defensive investor. I always assume if things go south, am I prepared to handle that? So a lot of people are panicked about Bitcoin going down in price, and I'm thinking, it went up way too fast for the technology. I mean, it was exciting to be on the market and watch it go up, go up, go up. But the reality is, most of us would be better off if it hung out at $7,000, $8,000, $9,000 for the next 10 years. And then it took off. Most of us would be far better off in this space, but I find that people are getting bored almost, it seems like, when they're talking about this space. And it's really, I don't feel like they understand the ups and downs in the market, and they don't really understand how you make money. You don't make money timing markets necessarily. You make money understanding markets and making sure that you're on the right side of the investment. That's why if you don't understand the cryptocurrency technology, you have to first understand the technology, and then you need to understand things like this. Carl Icahn, he's a billionaire hedge fund manager, and he says the markets one day will implode because of these wacky funds using so much leverage. So a lot of bankers, a lot of hedge fund managers, a lot of these major financial guys, basically they're operating in a market that moves, 0.5% or 1% one way or the other. They can't time the markets. So what they do is they create these exotic derivatives that use leverage. So if the market moves 1%, then their actual derivative might move 2 or 3 or 4 or 5%. So they use a lot of complex derivatives. Now keep in mind, it's the big banking people and these hedge fund people that have created most financial calamities that we've had. I mean, keep in mind, the smartest guys in the room ran things like the Bernie Madoff scam. Bernie Madoff was considered one of the smartest people on Wall Street. In fact, the SEC, this organization right here, so keep this in mind, this organization right here used Bernie Madoff's guidance. He issued guidance to the SEC several times before he was considered, they found out he was basically a fraud. So if he can fool the SEC, then anybody can be fooled. Um, the smartest guys in the room created Enron. Keep that in mind. The smartest guys in the room created things like WorldCom, all total frauds. So you consider, the smartest guys in the room created the derivatives that led to the housing bubble. So once you understand that, then you understand that, these powerful financial guys oftentimes create problems for the rest of us. And when you understand that, then you try to figure out a way to invest around what's going on in the market, if you will. And the market has went straight up. Nothing goes up forever, just like Bitcoin doesn't go up forever. The S&P is not going to go up forever. So Carl Icahn is saying, hey, listen, this market is going to ultimately implode. There's too much exotic leveraged products, and one day these securities are going to blow up in the market. Now, the billionaire investor went on to say the market itself is way over leveraged, meaning he's saying there's going to be an impending crash, and at some point it could implode. But for now, he believes this thing will probably bounce back. Now, I actually don't like this statement. I think this last statement here is kind of a way for him to CYA. He's basically saying, hey, it's probably going to bounce back. In the event that it doesn't bounce back, then he was right all along. If it does bounce back, then he's still not wrong. It's kind of like, we'll wait and see. However, I do believe, and I'll make the prediction here, that there's a strong likelihood that we're going to see a falling market sometime. I'll put it this way, probably before President Trump leaves office. Like or hate the guy, he's done some pretty fascinating things for the economy, and I believe that he may be kicking the can down the road with some of the things that he's done, because the number one thing that you need is a strong consumer confidence to keep a market going. These tax cuts have put money in people's pockets. Many people are going to feel good about that, and so that's going to be a good thing for a little while. But if the bond market starts unraveling, if the market keeps dropping like it has, I think it's down another 500 something points today, that's going to spook people overall. So I believe that the major financial markets are not, I believe that they are not directly related to the cryptocurrency markets, but I believe that they've yet to be proven to be fully independent. I was thinking that, I think it's fascinating, cryptocurrency markets started dropping, and then all of a sudden the S&P started dropping. Keep in mind, some of the biggest money that's moving in and out of the crypto space right now are the futures. We now have futures on crypto. So when that money was moving out, that might have been a sign that some of those big financial firms were going to start moving around in the selling off in the stock market as well, the S&P, and that might have been what led to the crash. I'm just theorizing. It doesn't really matter. Here's the general rule. Research the technology. Understand that we don't control the short term up or down. Invest consistently with money that you're willing to lose. This is an investment advice, but the general rule of thumb is just don't be stupid. Research the market. Make your own decision about the market. But at the same time, be prepared. The market's going to be up and down. It's going to be a wild ride. My whole goal is to see how many Bitcoin I can collect. Right now, I'm just investing a little bit at a time, and I'm moving around in various investments in the crypto space. But currently, I'm holding. I may be buying some more mining contracts when they become available. Probably just depends on the current price at the time when they come available. Market's going back up. We'll see what it does tomorrow. It doesn't matter if it goes up or down to me. I'm here in this space long term. This space is exciting. The governments now are trying to figure out what's going on. I mean, if you're in this space now, don't be freaking out. Don't be selling and running off. And unless you're already in over your head, then you need to get out of the space and go back and buy a book and do some research. But this is an exciting space. I mean, the future of this technology is going to be incredible. We haven't even begun to scratch the surface of what's going to happen. Thank you so much for listening. Thank you so much for watching today. Let me know your thoughts below about the market. Do you think the overall financial market is in any way at all connected to the crypto market? Let me know your thoughts in the comments below. Hit that subscription button, hit that thumbs up icon, hit that bell notification icon so you can know when I put out my very next video. Thank you so much for watching. Have a great night, have a great day, and God bless.